So will anything come out of these talks? Let's get the read from market watchers Ryan Payne and Randy Watts, as well as our very own Gerri Willis. Gerri, what are you hearing? Any expectations at all?
Well, I think, it wouldn't take much to make the markets happy here. If anything at all happened, it's not clear anything will. I think at this point, both sides just want to bring this all to a conclusion. It's in both sides' interests. And as we know, there are winners and losers in this in the U.S., right? There are consumers could be at a disadvantage here as prices rise. Thank God the dollar is strong, and that's allowing us to buy more with our dollars. But China also at risk here, too, and especially because their economy has been, seeing these weak numbers out of that economy. So do we get something? Unclear, but anything would be a win here.
Could the markets digest no deal at all? No deal. I know they don't have a deal. It doesn't happen.
Coming out of the talks this week, I don't think people really expect a deal this week. I think this is more like an appetizer for the entree that's coming in November.
And the entree would be?
Which would be the meeting between Xi Jinping and Trump later in the fall. So I think people just want to see.
That's the APEC meeting, and that's something that's well after the midterm elections.
Correct. I think people just want to see that those talks are going to happen, that there's getting a groundwork set for it. I don't think people's expectations are too high right now, but they want to feel that there is some progress and things are continuing in terms of a dialogue.
Yeah.
It's better to talk than not, right?
Yeah, well, I think the bottom line is, the market would be a lot higher right now if we didn't have all this trade war, rhetoric kind of weighing on the markets. I mean, if that lifts a little bit, fundamentals, Neil, are just so good right now.
So it wouldn't even have to be a great deal by your measure, as long as you have removed the uncertainty of an ongoing trade war. What it could yield, something is better than nothing.
Yeah, it reminds me of before the election. Remember, the markets went sideways for quite a while, then bam. Right. Once you knew who was going to be in office, markets were rocking and rolling, and I think that's the same dynamic you see right now. A little certainty, markets take off.
Is it the kind of thing, too, that the markets digest who has capitulated on what? And then they sort it out quite some time later. For the South Korean deal comes to mind. It wasn't a great deal, but it was something. I'm not minimizing it. Is it going to be along that ilk?
Well, I was going to say, why don't we just convince China to quit managing the yuan, right? The yuan. That would be the answer to all our problems, right?
They say they don't do that.
Currency,
That's true.
And they're stinky liars, right? Come on, don't we all know this?
They're not going to say they're stinky liars.
Yeah. No, they won't say that, but we will, and we have repeatedly, right?
Yeah.
If they allowed that currency to react just like the dollar does, their goods would become more expensive in public markets. They'd be more competitive globally. They would be more like us in that respect. That would be a solution that would cost us nothing.
And the Chinese are the ones who called for this, right? To come to the United States and talk.
Well, I suspect they're feeling a lot of pressure on the economy right now, and that's probably a very good sign that they're ready to negotiate. Because let's face it, we're in the strong seat right now, right? Our GDP was at 4% this past quarter. Earnings keep going up. Our market's doing really, really well. So at the end of the day, we're in a position to probably win this negotiation.
And trade is very asymmetrical with China, right? China sells us $524 billion in goods. We sell them $188. So really, they have a lot more to lose than we do. And the fact that the trade terms haven't been that great over the past, that I think anything we get out of this is really an improvement from where we are now.
How will it help the economy and/or the markets?
I think markets don't like uncertainty, so I think any resolution that we get this fall would be positive. Kind of like Ryan said earlier, the economy.
So you don't see it already reflected in the run-up we've had prior, and that it sells off on
No, I think the run-up is really due to the fact that earnings have been so strong.
Okay.
Earnings were up almost 25% last quarter. Estimates are going up, and the economy is doing quite well. Really, I think when we think about the market, earnings estimates look like they're going to be double-digit for the rest of this year and next year. So there's a lot of good things happening right now in the U.S. economy.
And the Shanghai Composite is down like 25%, right? So they're under pressure in a variety of ways. The economy broadly, reinvestment in that economy dramatically lower. So there's lots of pressure on China to do something. I just wish they'd take care of their currency, because I think that would be an easy way to solve the problems that we have.
Yeah. Well, they kind of have to right now, too, because remember in 2015 when they devalued their currency, they had a big flight of capital, and then they had to put capital constraints in. So they're at a point now where they import a lot of manufacturing parts from other parts of Asia. Now that's becoming more expensive because they've come to a point where their currency is so low. A lot of their debts in U.S. denomination, that's increasing as well. So my guess is the currency is probably going to start stabilizing and probably start going up, which will actually be a pretty good sign to buy in China as well.
But wouldn't our companies still be sucking up to China regardless? Apple, with this latest move to pull 25,000 apps that the Chinese found offensive, no matter what deal we sign, we'll still see these guys sucking up.
I mean, China's a very, very important market for Apple. It's about 20% of their revenues. They did about $17 billion in the App Store alone over there. So it's a market they can't ignore. I think with regards to the apps that were pulled recently, those were mostly gambling and lottery apps, which the Chinese government had told them they didn't want to see on the App Store. And so maybe Apple needed to clean a little bit of that up. They've periodically cleaned up apps.
These were third and even fourth-party apps that they weren't. But so Apple said it was no skin off our nose.
Yeah, and you got to forget too. We employ, Apple employs a lot of Chinese in their, where they manufacture their iPhones over there. So I mean, we're both dependent on each other here. It's not just Apple's dependent on China. China's dependent on Apple.
So real quickly, guys, if we don't have an accord or some sort of progress before the midterm elections, that could be a problem, right? Unless it's, to your point, the confidence is that we're leading to one.
I think zero progress, and it looks like those talks in November are not going to happen. That would be very negative. I think a little bit of more positive talk out of both parties, and it being clear that they're going to both sit down and meet in November, I think that's enough for the markets.
Xi Jinping, though, who is like leader for life, something like that, right?
Right.
Yeah. But even leaders for life have to look over their shoulder, right?
Oh yeah, and I think Trump is acutely aware of that, so he's a little strong arming here.
Yeah, all right. Guys, thank you all very, very much.